Hey, one rental at a time family. I want to record a video even though our buddy Mike Zuber is on vacation. It doesn't mean I don't want to get on here and talk to you guys about what I'm seeing in the market. In today's video, I want to talk specifically about mortgage interest rates coming down, where they're going to head in the future, and how that will affect home prices, because it's something that I don't think a lot of people are thinking about. They're just cheering on lower interest rates, not realizing the effect it's going to have on the housing market. And to be completely honest, as someone who's in the trenches day in and day out, it is already having an effect that most of you probably wouldn't like if you knew what it meant for how much you're going to pay for your next property. So let me show you the charts for mortgage rates, and then I'll talk about the effect of it, right? This is only 6 weeks from mid-January to today, March 3rd. Rates have gone down a full 0.5%. Now, before you get too excited, realize that this 6.75 is like perfect loan scenario and paying a little bit upfront in discount points. This is where the average 30 years being locked. Some people are paying 0.5 point. Some people are paying a point. It really depends on your down payment, your credit score, and all the other factors that go into it, how much you're paying for it. But nonetheless, rates are down about 0.5 percentage point, which, especially in California where I'm doing a lot of business, like 0.5% on a $600,000 loan is $3,000 a year in interest. That's a lot, right? That's like $250 per month in payment. So people are qualifying for more. Their monthly payments on the same price house is less. But what I really want to talk to you about is how this is affecting real estate already. Then I'll talk to you about where I think mortgage rates are headed. So current market, I've got a couple examples from just this past weekend. Well-priced house, great neighborhood. Like a lot of great neighborhoods, there's not a lot for sale. There's not a lot of people selling, and those that do, they're not always turnkey ready. Grandma might have lived there for 60 years, right? Or for whatever reason, the house isn't in perfect shape. So when the houses that come on that are in perfect shape and they're priced well, you know what happens? I got two examples: $899 list price, in contract for $970,000. Roughly 8% above the list price. Another one listed for $575, multiple offers. It's I think their offers were due today. We're going to see. It's going to land somewhere in that same range, about 8% above the listing price. Now, is this a consequence of lower interest rates? Not necessarily, but will mortgage interest rates add fuel to this fire? 100%. And so spring coming right around the corner is something that adds demand to this whole supply and demand equation. Mortgage interest rates headed downwards. It not only helps buyer sentiment, but it just brings more and more buyer demand. Either they like the payment more because interest rate is lower, or they qualify at 600 where before they were capped at 550, whatever the case may be. This has a lot of, I don't want to say negative implications, but it has a lot of implications on how much demand goes into the market. And demand is just another function of upward pressure on prices, right? So before you guys get too crazy in the comments about, you're an idiot, you want people to act now, and that's the reason for talking about how it's going to get more and more competitive this summer. Not necessarily. I am too curious, like you, how this video will age, because I think I see something coming. I think I see a lot more demand coming. I think people that buy in March and April are be happy they did. When come May, June, and July, there's 10 or 12 offers on some of these houses, and they're going for 8-10% above the listing price. But more importantly, I think it's something you have to keep in mind, and you have to be really tuned into your local market. If you're in parts of Florida, if you're in parts of Texas, this might not apply to you. But if you're in another market where inventory remains tight, and sure, it's better than it's been the last couple of years, most all places, it still hasn't returned to 2019, what they call pre-pandemic levels. But I see a very competitive spring and summer buying market ahead. And I just think that it's something that people should be thinking about. Okay. In closing, I promised it up front, so I got to deliver. Where do I see the future of mortgage interest rates? A lot of economic data, a lot of things coming out that's not painting a rosier picture as maybe previous projections. I think the economy's been in trouble. And, generally speaking, it hasn't been as strong as a lot of the data has shown anyway. So it's no surprise to me. But this kind of stuff has downward pressure on mortgage interest rates. So I think mortgage interest rates continue to go down, whether that's from the current 6.75 to 6.5 or to 6.25. I think it's not, this super drastic downward, like just rates falling. But by the end of 2025, I think we're going to be somewhere in the 6.25 range. 6.25 to 6.5 is a little more likely than 6% to 6.25. That's my take on that. I would be more surprised to see it sub 6.25 than I would to see it above. But if I had to peg where we'll be in that 6.25 to 6.5 range. That's my opinion. Leave your comments down below. Love to hear what you think. Talk to you soon. As always, if you want to connect with me and my team, we're licensed nationwide. Just go to greatmortgagebroker.com, fill out the form, and we'll help you out in 48 of the 50 states. New York and Massachusetts are the only two that we can't assist in, but I've got great referrals for you there. So greatmortgagebroker.com, fill out the form. We'll talk to you soon. Bye-bye.